What's going on? It is Nicole Murray back for another The Mortgage Note podcast. With me today, a brand new guest.
Hi, this is Patrick Gourley. I'm an associate professor of economics at the University of New Haven.
Awesome. Well, thanks for taking the time. Let's start with the pandemic because we are still feeling the after effects. Can you give me an idea of how that entire COVID-19 pandemic has had an effect on the real estate market to this day?
Well, it's interesting because a lot of different things kind of get lumped together into being the COVID-19 pandemic.
Yeah.
Really, though, when you want to look at the US real estate market, what's happened is not the result so much as COVID itself, but of the government response, right? You had around $5 trillion pumped into the economy in 2020 and 2021. That then caused inflation. Then, because of the inflation, you had a rise in rates, interest rates. And so that's really kind of driven, I think, a lot of this boom in the housing market. People had a lot of money. I don't know who, it certainly wasn't going to me, but this $5 trillion went into a lot of people's pockets. And then once inflation took off, I think a lot of people realized, wait, rates are about to go up. We should buy housing now. They did. That drove up the price of housing. And then as rates did come out, that doesn't drive up, the sales price of a house, but makes mortgage payments more expensive. So we've seen just an unprecedented rise in housing prices, and especially just the effective price that you're paying if you buy any value home and take out a conventional mortgage.
Where do you see, right? So all that money got pumped into the economy. It's at where it's at. Where do you see things going moving forward?
I don't have a crystal ball, right? Economists have successfully predicted 7 of the last 5 recessions, is the old joke. So we'll see. It's really hard to imagine, though, housing going down by a significant amount, compared to the 2007, 2008 recession. The just balance sheets are a lot stronger than then. So people, it's easy to say, oh, there's a bubble, just like there was in 2007, 2008. The reality is as we get more and more data, it's starting to look like there wasn't even a bubble then, right? If you could have had, if, with foresight or with hindsight rather, if someone said you want to buy this house in 2007 at the peak of the bubble and hold on to it for 10 or 15 years, you would say yes to every property. There's hardly any houses that are valued lower today than they were in 2007. Most are valued by significantly more. So I think housing prices, I hope they plateau. I'm a first-time home buyer. I bought in 2022. I hope they go down, even though it would hurt me just because I think things are getting too unaffordable. I just don't think it's going to happen.
Can I ask, as far as, again, I know you don't have a crystal ball, just with your professional scope, interest rates, they've been a big topic of discussion. First of all, do you foresee them getting cut this year based on how things are going?
I think there's a decent chance they get cut this year, but it's not going to be by the amount that the markets were forecasting 6 months ago. At one point, the conveying kind of wisdom was that, oh, we might have 1.5 percentage points worth of cuts in 2024.
Yeah.
Now it might be half a point. This is never going to happen. I would actually be in favor of a quarter point increase at this point, just to really show the markets that the Fed is serious of getting down to their 2% target, but that isn't to happen. I think that they'll keep them level, at least for the foreseeable future. Now, if inflation ticks up, if it goes up to 4%, then we could see an additional rate increase, which of course would then trickle down to the mortgage markets. So hopefully the interest rate that people are paying for new mortgages will stay relatively level over the next year. I don't expect it to see a large increase or decrease.
So a big topic of discussion that comes with interest rates, right? Um, should people be waiting to buy or not because of the interest rate? Can I ask your opinion on that?
I don't think people should wait to buy. I mean, it'd be nice to say that rates would come down, but yeah, I think that a year from now, 18 months ago, from now, 2 years from now, the rates are not going to be significantly different than they are today. If they are, you can always refinance, or you should be able to refinance. So, right. And the financial status, of course, is not the only thing you think about when buying a house. It's, do you want a home versus do you want to rent? So if you're someone who wants to own and have your own property, then by all means buy today. And if you enjoy renting, then you can say renting. I've never been a big fan of this idea that if you're renting, you're throwing your money away or anything like that. So I don't think that there's a clear argument for doing something differently than you want to do because of the current financial markets.
You are probably the first person I've ever heard that says you're not necessarily throwing your money away renting. Can I ask why?
Oh, you're definitely not. I'll come down stronger than that. That's a as an economist, that's a totally incoherent and wrong take, right? You're paying money for some place to live. It's an exchange for goods and services. You're not throwing your money away any more than if you buy your own vegetables instead of growing your own in the backyard. It's an exchange. There are definitely advantages to renting a place, as I like to say. I had an apartment with a pool before I moved into a house without a pool. I could never afford a house with a pool, but I could afford an apartment with a pool, and I loved having that there. That's just one example for me of an amenity that I can get when I rent that I can't when I buy.
Okay.
Um, so I think it's very foolish to say you're throwing your money away. It depends a lot on what your individual goals are and what your preferences are.
Yeah, thank you. Let's pivot a little bit, because obviously the state of the market and everything with real estate is very tightly intertwined to that big settlement with the National Association of Realtors. First of all, maybe for someone who is hearing of this for the first time, can you give me a little 30-second overview, maybe of what that settlement was?
So in the United States, realtors get a higher commission than basically anywhere else in the world. A lot of times it's a 6% commission that's split between the buyer's agent, the seller's agent. Of course, there's, different conditions and with different sales, but that's kind of the norm. That's much higher than other countries. You'd expect to see things around maybe 2, 3, 4%, definitely not above 5. So 6% is high. And it looks like that a lot of different realtors were colluding and kind of pushing business toward other realtors that charged their 3%. And so you had all these 3%, getting us to 6% became the norm. And it wasn't a free market. And so this court case found that they were colluding, and yeah, you have a 9-figure penalty that was paid.
How do you see this settlement affecting things moving forward with the real estate market overall? We'll talk big picture first.
Yeah, I think with the real estate market, I mean, this is a nice step forward. You don't want collusion in any market. That's a bad thing. And so that's good. It might result or should result in a small decrease in a home's price, all else equal. But again, we're talking about moving from a 6% commission to maybe a 3 or 4% commission. So while, yeah, it'll be nice if you're selling a house that now usually the seller pays the fee. It'll be nice that you only have to pay a 4% commission rather than a 6% commission. That's only a 2% difference of the home's value. So you can expect to see a small decrease, but again, this pales in comparison to what the housing market has done over the last 5 years.
How do you see this affecting real estate agents, the people on the professional side, whether how they work with people, how they work with one another?
It could have some pretty big consequences. If you're a successful realtor today, you make a lot of money, and that could change. Right? There's still going to be people at the top that do very well. There's still going to be people that really it's not their forte, so they don't really succeed at all. But I think in the middle, you could see a lot of agents that were making 200 grand a year. Maybe now they only make 150 or even less.
What about the buyer side, the person who's maybe hiring for the service? How do you see that changing?
Well, so generally the buyer's agent or the buyer isn't actually paying the commission directly. Of course, they are still paying it through the home price. So as far as a buyer's agent and seller's agent, I don't see how this would make the relative change be any different. You'd expect seller's agents and buyer's agents fees to probably go down by comparable amounts. That said, we'll see.
Yeah.
We're in kind of uncharted waters.
Okay, I guess I'll just ask if there's any other overall comments that you have, whether it be about the market today, the settlement, or anything in between. Just to
Ju-
keep.
Just, I'm hesitant to make predictions in general, but I really don't think there's any type of bubble. Could housing prices go down by 5%? Sure, but that's not a bubble. we're not going to have a 2008 style housing market crash would be my first. And the second thing is it's great that it should be harder for realtors to collude, but at the end of the day, it's a couple percentage points. It isn't going to be, it's not going to be cause a massive shift in the housing market.
Okay, well, I'm out of questions. I cannot thank, short and sweet, cannot thank you enough for taking the time. This is the Mortgage Note podcast, and we'll see you next time.